rolling.
Now we're rolling. Oh, yeah.
It's like a 70s throwback. It's like Chips.
Oh, dude. And I do like that. You guys have that, like 4th of July? You ever have the police guys come by with their bikes? They do a little side, like...
Little siren.
Yeah.
Everyone that's listening can't see either of us riding air motorcycles right now.
That's true. But for everybody watching on Comcast, you can see us doing it.
That late night crowd loves your little dancey doos. Do you think people get annoyed with the way we start the show?
50-50.
I'll take those odds.
50-50. I would say we don't have a lot of like hate mail coming at us, so probably odds are maybe more stacked like a 70-30.
I guess they would hit us up on that hotline if they were mad.
Yeah.
We'd be blown up with hate.
Shut it down, guys.
Yeah.
Shut it down.
Get to the point. Well,
I'm calling
it's
you guys to let you know I'm calling Comcast to shut you down.
Well, I think it's important for people to know this is how we kind of get into our groove, settle into it.
Yeah.
Like, we never wanted to feel like you're showing up to a lecture at the university.
Right, you're not sitting here. This is not a scripted ripoff, guys. You're not coming into us. It was like Lecture Hall 101. We just want to have fun.
We just want to have fun and educate. That's what we do. Lead with the education.
Lead with education, a little transparency, you know.
Absolutely. So to just pop it right off, if you are tuning in just now, you are either watching or listening to MLO. And I'm your host, Nett, and this is my trusted co-host, Casey Carpenter. And today is Casey's birthday.
Oh, yeah, I do. I keep forgetting
You
about
knew
it.
we were just talking about it.
I know. I keep trying to just go down in age, but...
Dude, that's awesome.
Yeah. Happy... and our producer, Josh, had a sweet little happy birthday song for me, so that was super cool.
That was sweet of him. I like
Very
the jingles
sweet of
at
him. Little
MLO.
Yeah, a little
AKA
jingle jangle.
MLO.
A.K.A. MLO.
Well, happy birthday, Casey. I'm glad that you're back. You went on your trip. We missed you.
I miss you guys.
And I feel bad I didn't get you a cake or anything.
All good. Don't need the cake. Plenty of extra LBs.
Are you running again, or is you just glistening from your trip to Palm Springs?
I have been running a little bit.
I can always tell.
Thank you. I definitely got a little bit of a tan, so hopefully that's helping with the light action here. But it'll be gone in 2 days, trust me.
Just gone.
Yeah, shoot that. It's like a spray tan off and on.
Let's jump into the episode today. This is a good one because I think we always say that they're good ones. But this one we're talking about the most common causes for delays on your real estate transaction. So the things that you want to prevent doing, right, Casey?
Yeah. And the things that sometimes just get frustrating even on the lending side because you're trying to get something through and there's just delays sometimes that happen on both sides, clients and lending.
Well, and I often try to think about this because I feel like one of my foundational approaches of working with people on their mortgage is to reduce the stress. Yes. So a lot of that is explaining the why, explaining things that they can do now or up front to reduce any sort of last minute stresses. But sometimes...
I got one going on right
sometimes
now.
The pastor preaches the same thing more than once, right, Casey?
And sometimes we can lead them to water, but we can't make them drink the water.
That's so true. But let's kind of get into it because we can give a little bit of side banter on maybe some examples. But the number one thing is not getting your loan documents to your mortgage company or your lender, a.k.a. us or whomever you're working with, right away. Our style here at MLO is to have you do everything up front before you're even putting in offers. So basically, we're going to ask you for your W-2s, your pay statements, your tax returns, and then proof that your cash is legitimate, that you're using for the transaction. Get all that paperwork done early, Casey. We don't want you moving cross country or in town and digging through boxes in the U-Haul. There's enough going on as it is, right, Case?
Yeah, and sometimes those attics are tricky to navigate in. I mean, lots of boxes to dig through. It's hard to find that old 2018 W-2 or whatever it is.
Well, now, dude, there's so many passwords. Like, oh, you're going to go back into your TurboTax, don't remember the password, then you used your junk email address, then you got to restart that. Google doesn't like you because you're pinging a different IP, and then all of a sudden you want to go to bed.
Yep, and that's the way, honestly, it goes. And guess like what? That. The docs were never delivered.
Yeah, so getting those up front, and, I think Josh and I were actually talking about this on last week's episode of MLO Unplugged, our kind of laid-back transitional episode. Got caught with that?
Yeah, a little MLO Unplugged for you.
A little Unplugged. It was a good episode if you haven't listened to it. But we were just talking about creating that folder, secure folder on your desktop, and every time you do your taxes, get a W-2, just slide them on in there, and be ready, set, go, no huddle offense all the time. It's a stress reliever. It's the number one thing you can do to alleviate any sort of pressure.
For sure. And to try to give you guys just a little bit of a back history on why, it's important to get those in quick, and why like this timing process is typically that real estate transaction, Addy, lasts, once you're in contract or getting there, 30, 45 days, something like that. And then guys, remember too, we have weekends and stuff like that. There's days that are, essentially holidays that were, business hours aren't being conducted. Business work isn't being conducted on those weekends through some of the companies. So it's like you lose days. So a 30-day transaction actually might only be 21 days, right? Or something like that.
You're so right. And some months, like February, always a short month, a nightmare month, because there's maybe anywhere from 19 to 21 only business days in that month.
We know that February is a short month, guys.
Very short. Also, the great point, though, on weekends and holidays not counting for, the work periods for the mortgage company, but also the title and escrow and eligible signing days. Everybody out there, you're not expected to know all this, but there are mandatory wait periods for each milestone through the process. So if there's only X amount of days and you take, 3 days when it could have taken 1 day to get a certain document over, the whole team on the mortgage and the bank side can't move to the next step. They can't. It's like a scavenger hunt. You got to get that. They got to get this clue before they move on to the checkpoint. Like, what was that Amazing Race? They got to finish the checkpoint. Everyone's waiting. There's like 4 to 6 people waiting on one document often. And people will move to other files if it's not complete and put together, right, Casey? We've experienced that.
Totally. And there was like a terrible drip campaign out there that was like the Amazing Race, like they did getting through the mortgage process to the end. It was awful.
I got to see that.
But, guys, it's story time for you. I mean, why it is important too, because like Addy mentioned, there's different processes and steps as you're going through it. You got the upfront stuff, you got in the middle of the loan as you're going through, and at the end when they're closing. But stuff has to happen or get done for you to move on to the next step, right? So initial disclosures go out once you're in contract. But we need you guys as clients to go and review those and e-sign those, because until those are e-signed or reviewed, we're sitting.
I'm really glad you brought that up, because that's our number 2 point right here.
Oh, it is?
Yeah, look at you.
Oh, that's not...
You naturally slid that in.
And it's because I have one, and I'm still trying to get that accomplished, as I've been sitting for a couple days waiting at the starting line. That means I can't order appraisal. That means I can't submit to underwriting. That means we're sitting on our hands.
I love that you bring that up. And what Casey's explaining, everybody, is when you get into contract, there's going to be what he referred to as your initial disclosures, right? So these are usually electronic copies of the estimates and structure of what the financing and the real estate transaction is going to look like. We're not laying cement. It's not forever. These are best estimates, good faith estimates, they used to be referred to as. We are required to get you to consent to those, finish the click signs, and within that initial package allows for us to communicate digitally rather than old school, kill a tree, print it out, meet me at the office, take forever approach. If you do not consent to that electronic disclosure, often lenders are then forced to work with you through snail mail, print, and ink signatures, which can be very challenging in these days. Wouldn't you say, Casey?
Yeah, absolutely. And there's other parties, guys, that are depending on us as well. Not just yourself buying the home or us lending the home. You got people selling the home, people moving out of their home to sell it to you, title agents. There's just a lot of people involved, and a lot of it will be, I think, transparency, education from your LO you're working with, because you don't know what you don't know. So if you don't know you need to sign these things, you might just be sitting there, right? So it is a very kind of two-way street there. We're not putting that on just consumers. LOs need to educate and make sure people need to know that they need to sign them.
Yeah, and so we blended 1, 2, and 3 all together there.
Great.
So we did a really nice job. We parlayed that very well. I would also kind of say, when you get into contract, here's kind of a real talk situation.
Give it to me.
When you get into contract, it feels very overwhelming. You get an accepted offer, you're emotionally drained. Like, you went through that whole hot market, very competitive. Now you've got agents and title companies just hounding you. It's going to feel like grandma's asking you to do 20 chores in 1 hour and just nagging you. I need this. I need this. I need you to drop off your earnest money. I need you to go to the title and escrow company. I need you to schedule your inspection, your radon, your sewer, like so much stuff. Then you've got Mr. Old Lender. You got Casey and Addie coming in and being like, I need this and that and that. Take a deep breath. Write it all down. Note the most important thing is getting that earnest money in, getting your home inspection, sewer radon if you like to do one, scheduled going. And let the lender can work behind the scenes, but the lender will email you stuff when it is ready to go. You don't need to go and, oh, am I missing something, Addie, Casey, anyone, Mr., Mrs. Mortgage Broker? They will come to you through email. So try not to become overwhelmed and just focus on the little things. And people will email you. You'll get the stuff and tackle it. I just wanted to give it a little heartfelt because it's draining. You're like,
You forget about that because it's like, even if, they might have been in a grueling couple-week battle just to try to get into that.
Couple months, depending where you're at.
Right, yeah,
in the
totally.
nation, yeah.
And I think you do forget about it because once they get in a contract, who knows? I mean, you might get 10, 12 emails or something, coming at you from escrow, your agent, your mortgage. So, yeah, I like the way you kind of relay that because you got to take a consideration of their point of view too, because that's a lot coming at you in a short amount of time.
And this is why it goes back to our earlier points of getting all your documents in. Because if you've been working with a mortgage professional and someone that understands how to close loans with the least amount of stress, they're going to ask you for that stuff up front so that it's less work for you in the future. But everybody out there, you got to understand, no one's trying to make the process any harder on you. There's no gain for us, for you at all, right? Everyone wants you to get the best deal possible, and they want the process to be as easy as possible. So often there's people that want to contradict the request for documents. Trust me, no one wants to add another thing to have myself or the team rifle through. These are requirements for the loan so you can get the money and buy that sweet home.
Absolutely. Absolutely. I like the way you laid that out there.
I don't think I've ever used sweet home before, but
you can buy sweet home in Sweet Home, Oregon.
I always think more like sweet tea for some reason was coming to my southern draw, like sweet
Jeremiah
tea.
Sweet tea.
Well, it is really nice out, so I'm probably kicking into summer mindset. But let's roll to the next one because this one's pretty big, and you could argue a lot of points on it. It is not working with a lender who has access to do in-house processing and underwriting. This is a bigger rock to kind of chisel at. I can give you my distilled takeaway. So we're going to go from king size candy bar to fun size right now. Yes, everybody get ready. So when it comes to, I can't believe I just said that, by the way. When it comes to mortgage lending, you're working with a professional that either is usually in one of two buckets, the broker world or the direct lender world, right? So we work directly for a national mortgage company. So all of our team, our processing, our underwriting is done in-house. These are all people we've done hundreds and hundreds of transactions with in the past. We know the flow. We know the perspective. We have a professional relationship with them. That is an advantage to a lot of people. Because relationships do go far away. I'm like biting my tongue because I want to give the broker side a chance here, but I really do think that is a huge advantage. When you've worked with underwriters, you understand their perspective and how they look at loans. That can be a huge advantage. Now, if you're on the broker side, that's where that verbiage of shopping, are you shopping my loan? Where they're going to go to a bunch of other departments, wholesales, and companies and pretty much broker your loan. So depending on which one they choose, your loan and your experience with the loan, Casey, is now dependent on who they chose to close your loan. They're often working with processors, systems, and underwriters that they've never done a loan with, Casey.
And each company, program, etc., can have their own guidelines or overlays and stuff like that, right? So, you know, the next
That's a great point.
The next lender, you know, the product might be all the same. You know, it might just be a 30-year fixed conventional loan for everybody, right? But so-and-so lender A might have a little bit different guides than lender B on it, and a little bit less risk tolerant for lender C, or more risk tolerant, right? So there could be some other stuff that, you know, maybe that lender's not aware of because they haven't worked a loan through that company.
That's a good point. Just to throw a definition to that lingo drop there, overlay.
Oh, yeah.
Not a lot of people are going to understand what that is. That's a big one, Casey. I love that you said that. Overlays are a specific guideline that the investor, the company you're working with, has decided to implement that isn't the standard guidelines for universal mortgage. So an example would be the pandemic has brought a lot of different storylines with jobs. Some people lost their jobs back, had a gap of employment.
True.
So every company has their own overlay or their decision of what the mandatory time of back to work is. That's an example of an overlay.
Yeah, it's like guys like me and Addie here, right? We had somebody we're each gonna give $10 to. Let's just say, I'm comfortable giving Addie giving this person $10 just with nothing. But Addie is not comfortable over here just giving $10. He wants something in return to know that that's better. So basically, it's just a different way of looking at it. Different set of circumstances.
I'm instantly going to like conditional friendships in my head. You know, it's like, I'll be friends with you if, but I'll be friends with you with no conditions. You seem to be fine.
Right.
And lenders do have the ability to assess those overlays. It might be a debt to income ratio threshold.
Right.
More common might be minimum credit score. That's a big one on the VA loan because there's a national VA. Everyone out there who is VA eligible has probably worked with this company because they advertise heavily on the internet, and they're telling you that the minimum credit score for a VA loan is 680, which is not true. It is set by the lender. So their overlay is we do not do VA loans unless you've got a 680 credit score.
Yes. Because guess what? The VA does not set a credit score. That is a lender-specific set overlay.
If I had a cha-ching button, I would hit it right there because you just nailed it. We got the air horn from producer Josh. We rarely do that, but that was huge.
Yeah, that's a great piece.
I mean, that's the change. I mean, I'm going to get on the edge of my seat right now because these are the things that pisses me off.
Totally. Absolutely.
Because there's multi-million-dollar companies out there saying that this is how it is, when really it's back to the lingo. It's an overlay.
There's one going on right now that they claim
we can do 600.
There's a company claiming that they got a new VA product out there that allows you to take cash out of your home to do home repairs or improvements that they want, and it's called like New Day USA VA loan, something crazy, right?
That jingles.
Guess what, guys? That's called a cash out refinance. That's been around for decades. That is not a brand new loan.
Yeah.
I mean, it's unreal, dude.
Creative titling.
Yeah. Jokers.
Wow.
We got a little heated over here on it.
Yeah, but guys, we care.
We care, and we want you to know, you know, honestly, try to have as much knowledge as we can provide you so you're just educated out there going through the process, because if you don't know and you're like, well, should I go with a mortgage broker, or should I go with, you know, a mortgage company, or should I go with my credit union or my bank? These are all things that are things to consider, because those other ones might have the operations, underwriting the stuff in-house, and then the brokers, you know, might not at all, you know, and it could just be a whole different experience for you, and we want you to be aware of the different avenues.
I like the way you bookended that. My palms are sweaty now.
Mine too.
I feel like for a little bit I was like a Peloton bike trainer.
Yeah, I definitely.
Come on, guys, we can do it.
I feel a little palm sweat going
So to bring the heart rate down, let's kind of go to a new point.
Yes, sir.
That is a little bit more about when you first get into contract, when I was saying, hey, you're going to be overwhelmed.
Yeah.
One of those things that you're going to be required to do, or it's not a requirement. You can choose to do it or not. I always advise you to do so, is a home inspection. This is different than the appraisal. This is a home inspection. A professional goes into the home, essentially looks under the hood, is going to go through the crawl spaces, the attics, assess the roof, assess the siding, the windows, any sort of code violations, check all your systems. Get that scheduled ASAP, because those individuals are backed up. And really, there might be something that comes to surface that could make you want to back out of the transaction, right, Casey?
Yeah. I mean, I've personally experienced it too, guys, but that's the beauty of it because that's letting you know maybe that investment isn't the one for you. And that's good advice to have. You'd hate to go spend hundreds of thousands of dollars on a bad investment, right? But they give you that DNA of the home, and that's what I like, like the meat and potatoes, everything's out there. And their job isn't for any party in there. So that that person's going to do a very solid job, or I mean, at least we hope and expect, because if you got someone that gave you a real just heavy list of stuff, right? They went through thoroughly on that home. Because they're not buying the home. They're showing you, hey,
those reports are like 30 pages long at least.
Yeah. And so that, I mean, be aware though too, guys, that is a cost out of pocket, as well too, that sometimes people aren't aware of. It's not part of your loan or closing cost stuff that we don't necessarily consider, but we definitely try to make sure clients are aware of that. Because that will be a little extra cost for you.
It's a good point. To do a full inspection radon sewer scope, I think it's rounding up to about $600 all inclusive. Out here in the Pacific Northwest, might be a little bit cheaper. Things seem to be a little more expensive on the the West Coast than the East Coast. Not sure why, but that's just how it is. I get a lot of people who move from the East Coast and their jaw dropped by these third-party service prices, but it is what it is. The Oregon Trail. We all came here for a reason, and now we're paying for it, right?
Hey, guys, our jaws drop when we see the mid-house sales, too, because the west side, it just seems to be so up there. I mean, I know it is nationwide everywhere, but markets are different everywhere, guys.
Absolutely. And to back up the inspection process, the next one would be the appraisal. So note, everyone, that your lender orders the appraisal, not the realtor, not you. Compliantly and legally, it is a completely separate process to schedule. We as lenders, you as home buyers or sellers, and the agents can actually not communicate with the appraiser to influence value. So there is a chain and a process where there's middle people and there's a portal so that it can get ordered and nobody's influencing the appraiser. So that appraiser is going to go out there, inspect the home for code, but most importantly, ensure the fact that the agreed upon sales price is to value. Now, that cannot be ordered until we're backtracking to one of our first ones. Those initial disclosures are done. Within that first click signs that you get from the lender includes a one-page sheeter, which is called the intent to proceed. And no one can order the appraisal until you, as the home buyer, has click signed it. So this is the deck is weirdly shuffled here, but that's a big one, Casey.
You'll be like me, guys. I'm sitting here day three, waiting for these to be signed.
Because it takes out here, we're looking at 10 to 17 day turn times from when that appraisal is ordered and then it's turned back in. You cannot close or submit for a final approval on your loan till that appraisal is back in most cases. So that's a really big delay. And also, just to make it sometimes they are late. The appraisers are stretched thin. They're busy. Pandemic, COVID, scheduling, visiting the house, masks, all that stuff can take some time. I've got clients that are very antsy to get their appraisal, and sometimes it comes back a little bit late. Trust me, guys, it's not your lender's fault. Everyone wants it to come back. Remember what we said. No one's trying to make this any harder on purpose.
Right. And there's third parties, guys. Like we have it here, right? And then an appraiser's a third party. That's also a third just individual person of their own means and motivations and schedules and timing and everything else in life, right? So that is something to be aware of. That is someone that, we just don't have a whole lot of control over.
Yeah, no, you don't. But we can be proactive, complete document signings, get in line, and keep the amazing race going.
Yeah, and guys, we can also reach out. There's definitely touch-ins we do, check on appraisals, see status updates, making sure, communicating with third parties. So
we got 2 more points.
Let's do it.
This is a big one. Buying stuff on credit.
Are we avoiding that? Or are we?
You want to avoid opening up any new credit cards, taking out any new loans, buying a car. You don't want to mess with your credit, right, Casey?
No, because the number one easiest way just to know of is, let's just say you started your loan process, you're going through it, and most lenders out there will do a soft check at the very end of your loan to make sure you have not opened up any new credit during that transaction or during, since you had that credit pulled. And the reason is because that happens.
It does. You might have taken out a new loan or bought a car and you got a $300 payment on your credit report. That has to be factored in. You are restarting. Back to the Amazing Race. Go back. 4 checkpoints.
Yeah.
You are back.
Totally.
You're restarting the journey.
Yes.
And it's devastating when it happens. And I've experienced, even though I, stand up there and we preach it and we advise, people will still do it. And it's the number one thing you can do to make it harder on yourself is mess with your credit, take out new loans, fall for the promotional credit, save 20% at Macy's, not worth it. Pass. Thank you very much.
And we know
I'll pay 5 cents for a bag. Thank you.
Yeah, we know there's stuff to be bought, guys. You're buying a house, you might want new appliances or do stuff, but don't fall trap of financing that stuff in, or wanting to do it before you close your loan or move into your house and stuff, because basically every financial move is going to be looked at for the most part, especially on that credit side.
Use your credit cards normally.
Yes.
If you have any larger purchases, reach out to your lender. Reach out to us. Reach out to your lender who you're working with before making the purchase. Life does happen. Things happen. I could tell stories about unfortunate events where we needed to access that. And, the water heater broke, A, B, C, D, E, F, G. But just communicate before pulling the trigger on that, and you can save yourself a lot of stress and time.
Yes.
Lastly, moving money.
Yes.
Casey, we've got about a minute or two here. Hit me with why we should not be moving any money.
The biggest thing is we just have a money laundering, Terrorism Patriot Act that we follow, right?
Everything's got to be sourced.
It's got to be sourced.
Every dollar.
Every dollar. And it's just, for the most part, guys, cash, unless you have the exact way you made that cash, becomes very hard to prove where that cash came from. And so moving money either into an account or from an account to another account, that all has to be explained. And then you got to explain where that came from and show where it came from, right? So if we just have cash from cash, we can't use it.
It's unsourceable.
It's unsourceable.
Everything has to be backed by documentation, bank statements, certified account statements if they're not the monthly. And if you're moving money around, you're creating not only a huge paper trail for your lender, but also yourself.
Yes.
And it can be very stressful as you're trying to slide into home here and close. You don't want to get booted back to checkpoint number 2 when you were on number 10 sliding into home, right?
Absolutely.
You don't want to do that. What I always advise, you don't need to move any money till the end.
Yeah.
Keep the money where it is. Communicate with your lender until you have final approval. Typically going to be about 6 to 10 days to before the closing date. And then communicate a plan. I need this money. This is where it's all at. And this is how I need to get it to escrow for closing. You have plenty of time. Do not Zelle. Do not crowdsource. Do not Venmo and accept payments all over the place. All that stuff needs to be sourced. So it's in your best interest just to communicate, keep your money as it is. As you're approaching about a week and a half before close, if you've got a disbursement of funds over multiple accounts, talk to your lender and figure out the path of least resistance, which will be the least amount of stress for you.
Just and try not to just assume and act. Just call the lender, your mortgage advisor, and ask the questions, because they'll be able to just guide you through it and tell you just what to do. Because sometimes I just see clients act and then ask, and we got to react and fix.
Mm-hmm. And if you do have, say have a family member or someone contributing or a big fund, talk about it before you accept the money.
Yep.
There's ways we can do it compliantly and legally with less stress. That's my intention there. Less stress, less paperwork, no delays. We don't want to have any delays.
Absolutely.
Man, that was good. That's all good stuff.
Heck yeah. And it's all good information for anyone to know going through it, because, hey, these are just common mistakes that sometimes happen, guys.
Yeah. I mean, we just scattered a platter of nuggets for everyone, and they weren't kid-sized. They were meaty.
Yeah, this was king-size paydays, baby.
We went an entire show without giving you a call to action, which would be our VIP number. So as we conclude the episode today, Casey, why don't we hit them up with that hotline where they can text or call anytime?
Yeah, and for all that stuff that we just went over and you didn't know, so you want to have questions about it, you call this number, 503-847-9038.